today. So just so you all know, as you kind of mentioned before, we're recording this and we're going to send this out to everyone who registered. We had a lot of people sign up, but since it's the middle of the workday, they couldn't make the time. But in any case, let's get started. So, despite what we're taught growing up, wealth isn't built by working harder. It's built by making your money work harder than you. So if you're here or you're watching, you're already ahead of 99% of the people. You've realized that strategically scaling your investment portfolio is key to the financial freedom, or as like I like to refer to it as time freedom. So today we're not just going to be talking about making more money. We'll be talking about making your money work harder than you can so you can build up a portfolio and stop trading your time for dollars. The kind of wealth that doesn't depend on your time, effort, or even your presence. And it's about scaling your portfolio to the point where your investments are working harder than you ever could, generating passive income that keeps flowing no matter what. Now, a little bit about me. I'm Ryan Toomey, the co founder of TR Capital Partners, and I'm joined here by Lucas Ravanis, my co host and business partner. Before getting started in real estate, I was a sales professional in the financial services industry, dealing with wealth management and all kinds of different investment vehicles like stocks, bonds, annuities, and so forth. And the one common theme that I noticed among high net worth clients I was dealing with was that they all had real estate in their portfolio that provided them with passive income and also provided them with incredible tax benefits so they kept more of what they earned. Now, this is what sparked my interest in the asset class. And after years of investing in real estate, I truly believe it's the best wealth building tool out there. And since starting 4 years ago, Lucas and I have been able to acquire ownership in 528 units across three different markets and continue to scale by partnering with investors just like you.
Thanks, Ryan. Great intro there, man. So my name's Lucas Ravanis. I'm the other managing partner of TR Capital Partners. And as Ryan said, we've been investing in real estate for over 4 years now. A little bit about me as well is I'm 28 years old, and right out of college, I obtained a sales position at a Fortune 250 company. And I knew that sales was my calling. I love connecting with people and the communication aspect of helping others solve their problems through solutions that they didn't know about. However, working at this company really didn't give me the fulfillment that I was looking for, and it really just ultimately sucked the life out of me every single day. So when Ryan and I started investing in real estate, I kind of finally found that spark that I was looking for. Because you see, when we invest in these real estate properties, it's a double-edged sword for me. It allows me to help provide value to both the tenants through improving their quality of life and investing in that community, but we also get to help investors grow and build their wealth. So I'm incredibly passionate about our business, and it's really helped me figure out the fulfillment that I've been looking for. So we're really happy to have you guys here along for this webinar to dive into more of the topic at hand.
Thanks, Lucas. Now, before we get started, I just want to ask one question for all of you and answer in the chat or the comments. What is your biggest challenge with current investments? Now, this could be anything like underperformance, it doesn't provide cash flow, maybe you feel uncertain or that they're out of your control. Whatever it is, let us know in the chat. I'll address those later. All right. So let's get real for a second. We're all crushing at our job, we're grinding and hitting our numbers, but at what cost? This was the question that Lucas and I asked ourselves about 4 years ago when we got started. And the answer for us was time and control. Now we've all got busy lives packed with packed schedules, and many of us wake up feeling behind, or our inbox is a war zone. And the last thing we have time for is figuring out how to secure our financial future. So we follow the traditional route of contributing to a 401k, maybe having a few outside investments, and hoping the market doesn't take a hit like it did last week, so you have enough to eventually retire. Now I get it. A lot of times we tell ourselves we'll deal with it later, but later never comes. And the real problem isn't that you're busy. The problem is excuse me, the problem is that the time being spent now is never going to come back, and you're not setting yourself up for a financial future. You're just running on a hamster wheel, going fast, but in the end going nowhere. Now, this was the situation that we were in at one point until we realized, yes, we're making money, but are we really building wealth? So we sought out to do one thing, which we now refer to as creating your own economy. And this is when you build a world where your money is truly working harder than you do, where you're not trading time for dollars, where you have more freedom to spend time with family and actually get to enjoy the fruits of your labor. I'm talking about setting up a system through strategic investments that work for you so you can finally get off the hamster wheel. So if you're tired of constant stress, over the grind, and want to fast track your retirement and financial security to start taking back control of your time, what we're going to cover today is extremely important. Lucas and I have seen the incredible impact it's had not only on our personal finances, but also friends, family, and other investors who have participated in these opportunities alongside us. Now, with all that being said, by the end of the webinar, we promise that you'll have a much clearer path to growing your wealth without adding to your workload.
Awesome. Now, let's kick things off with a fun little eye-opening exercise. So, I'd like for you to close your eyes for a moment and just picture what your ideal lifestyle looks like, right? Imagine having the freedom to spend your days exactly how you wish and to do whatever it is that you want with your time. Now, what does that look like for you? Maybe it's traveling the world, maybe it's spending more quality time with your friends and family, or maybe it's even retiring early to pursue any of your passions. Now, let's bring this vision to life. So, passive income, particularly from real estate, can be an incredibly powerful tool to help you make this dream a reality. The goal of passive income is to have money coming into your wallet, regardless of whether you're working or not. And if you can stack up these income streams to continuously receive payments from passive income, then you can be in a position where you get to control whatever it is that you do, because you're not just getting by on one stream of income from the job that you're spending your time doing. So whether it's funding those exotic vacations or having more time for loved ones or retiring earlier than you thought possible, passive income really does open up a world of a ton of opportunities. Now, it has for me, and I know for sure it can do for you as well. So, with that being said, that kind of leads us into our next question. What exactly is passive real estate investing? So, simply put, passive real estate investing is a way to earn income from real estate without actively being involved in the day-to-day management. What that means is that you invest in a property and you get all of the upside of real estate. Upside like the passive income, the equity, and the tax benefits. But you have to put zero of your own time into managing that property. A group of industry professionals who are known as the general partners, that's the role Ryan and I play, we execute the business plan for the property on behalf of you, the investor, so you truly get income from these properties on a quarterly basis that is 100% passive in nature. So imagine owning a piece of real estate and benefiting from the income it generates without having to deal with the tenants, the repairs, or the property management. Sounds pretty great, right? Well, we know firsthand how beneficial real estate can be for anybody who invests. That is why we want to show the masses how powerful it can be to help grow your wealth. The issue, though, is the connotation real estate has with being a landlord. Most people think that in order to invest in real estate, you have to become a landlord, and that ultimately deters them from investing altogether. So, through our investment strategies, we allow anybody to invest and simply reap all of the rewards without the day-to-day struggles of managing the property or being a landlord. And I'll even share with you a real life story and an example. So take, for instance, one of our investors, we'll call him Bob. Bob was a director of sales at a large Fortune 500 company. Bob has an incredibly demanding schedule while focusing on his role at his company, and he didn't have the time or expertise to manage properties himself. Now, when we met Bob, he didn't want to invest in real estate because he didn't want to be a landlord, simply put. Bob was also frustrated with his lack of control and performance of his traditional investments in the stock market. So we took the time to explain to Bob how our syndication process works, and we watched that light bulb turn on. So by investing in our real estate syndication, Bob was able to pool his resources with other investors and benefit from the general partners professionally managing the property. Now, since Bob has invested, he has seen his initial investment grow significantly, and now he enjoys a steady stream of passive income that allows him to travel and spend more time with his family now that he's felt the confidence of his financial goals being met. So, I'd love to hear another quick poll from you guys. Are you guys currently investing in real estate? And if you are, just let me know how you're involved. We'd love to just put your answers in the chat and we can address them later in the webinar. But while we wait for that, we'll dive into the next topic, and the next topic is the elephant in the room. Why multifamily properties in particular are such a powerful investment choice. Now, when we say multifamily, we're speaking in terms of commercial real estate. So that's anything 5 units or greater that's considered commercial, and we focus on properties stemming from at least 25 to 250 units in size. So, multifamily properties, like these apartment buildings, they offer several advantages over other types of real estate investing. So, for example, they provide built-in diversification as we can take advantage of what's called economies of scale. And what that basically means is if one unit isn't rented, the others can still generate income. So, compared to smaller properties like a duplex or a triplex, if one unit isn't rented, then you'll lose half of your income or a third of your income. But when it comes to multifamily apartment buildings that we acquire, say a 100-unit building, we can have 10 vacancies, but we won't even feel that. We'll still be generating enough income to pay off all the expenses and we'll still cash flow positively. So that's truly a beautiful thing. And now here's also a pretty awesome statistic. Multifamily properties have consistently shown higher stability and growth compared to single family homes, which is what most people are familiar with. In fact, over the past decade, multifamily investments have outperformed mostly all other asset classes. That includes single family rentals and even most stock market indices. So, with the stock market, your aim is to make 7% each year. With multifamily, we target 18 to 20%. However, the stark difference is that you aren't betting on a company per se to do well and meet their quotas. What you're doing is you're investing as an owner with a GP team who directly controls the investment's worth as we force appreciate the asset, knowing we have full control over the investment. And what that really means is with commercial real estate, the name of the game is net operating income. Whereas residential single families and those smaller multifamily properties under 5 units, they're valued based on neighborhood comparables. So when we acquire a property, our goal is very simple. We need to raise the income, but we also need to decrease the expenses through better management. So through that process, we increase the net operating income, which means the property will be more valuable when we sell it compared to when we bought it. So we directly control the value of each property, which really mitigates risks for each investor. So the key takeaway here is that commercial multifamily investing offers the highest stability and growth when it comes to real estate investing, and that is why we love multifamily.
Now, when we got started in real estate, we had the goal of generating enough passive income to pay for our living expenses and reclaim our time. So we did this, we did what we thought was right at the time, and that was buying duplexes, triplexes, and scaling up over time. But the thing is, when you buy small properties like this, like, yes, you have extra income coming in, and that's nice, but it's far from passive. So we were spending a few hours per week per property, managing tenants, maintenance calls, evictions, etc. So we took a step back and reevaluated our strategy and realized that it didn't even align with our initial goal. We were neither earning passive income or reclaiming our time. So knowing that other investors deal with the same issues and this scenario is the exact reason a lot of people don't even invest in real estate, despite knowing its power as a wealth building vehicle, we started TR Capital Partners to provide investors with the benefits of real estate ownership without the hassle of being a landlord. And we do this through what's called a real estate syndication. And we believe this is one of the best ways to invest in real estate for someone who doesn't have the time, the desire, or the expertise to deal with property management and tenants and really just commit extra time to the daily schedule. And here's why. So, for those who don't know, a syndication, there are two main parties. There's the general partners or the GPs, which is our team. So, we do everything from finding the properties, negotiating with the sellers, securing financing, creating and executing a business plan, and then managing the property on behalf of the limited partners or the LPs, who are simply just people looking to invest and grow their capital without dealing with all the headaches and the work I just mentioned. So essentially, as an LP, you invest and we do the rest. Now, let's go through an opportunity real quick just so you get a better idea of what we look for and how it impacts you as an investor. So, the decision making process when it comes to these properties and choosing the right one to acquire is very complex. So, for the sake of time, I'm going to keep it high level. If you have any questions on what I'm about to cover, feel free to ask in the chat during a Q&A at the end or schedule a call with Lucas and I. So we target underperforming properties in emerging markets that we can add value to through renovations, rent bumps, and better management to achieve at least 16 to 20% annual returns for investors. And we focus on areas with job growth that attracts tenants, population growth, which leads to higher rental demand, job diversity, so we don't have to rely on one sector of the economy, in places where there are limited new builds, meaning there is not a lot of new apartments coming to the market, which can often lead to oversupply, which some of you may have seen in other markets across the country. So, in short, the key is to identify deals that have room for value add in markets that have growth on the horizon but hasn't yet been priced in to take advantage of both forced appreciation from adding value and natural appreciation from the market growth. So, let's go through an actual example. This is a property we acquired about a month ago for our investors. It's a 64 unit value add opportunity located in the emerging market of Springfield, Massachusetts. Now, we were able to buy this property for about $40,000 per unit discount compared to others in the market due to a direct relationship we have with the seller, giving us instant equity in the property. And overall, the building was in pretty good shape. So it only needed some light value add renovations, such as new paint, flooring inside 20 of the units, some exterior lighting upgrades, and updated security cameras. Now, for the property itself, our plan was to hold for 7 years, stabilizing it in 12 to 18 months through rent increases and renovations, while also executing a cash out refinance in year 4 to return most of or all of investor capital, getting the risk out of the deal. Now, there are a few reasons why we chose this property in this market, and it goes back to investing in acquiring underperforming properties in markets that show strong growth, yet it hasn't been priced in yet. This is where we get into the market early, which leads to higher returns for investors. So why Springfield? So it's already the third largest city in Massachusetts. It's the fourth largest city in all of New England. And with over $300 million in state funding going towards a ton of new redevelopment projects all around the city, we expect to see incredible growth as new jobs continue to pour into the market, leading to a higher population, therefore higher demand for rentals. With that, per CoStar, which is a market data company for those who don't know, they're projecting 7 to 8% year over year rent growth, further showing the expected spike in demand. But one of the reasons we love this market the most is that there is no new development happening, meaning there's literally zero new apartments coming online. So we don't have to worry about oversupply, which is happening in a lot of other markets. Now, going back to the specific property, why this actual asset? Well, as I mentioned before, we acquired for about $40,000 per unit discount, but we also able to increase rents across the board by an average of $160 per unit, significantly increasing our income. And on top of that, there are 20 garages on site that we plan to renovate and rent out, further increasing the revenue up by $21,000 per year. Now, over 7 years, that's more than $3.7 million in added value from these upgrades that gets passed on to you as an investor, which we can talk about here. So here's how it impacts you as an investor on a year by year basis. Over the course of 7 years, investors will receive a roughly 18% annual returns on their investment when taking into account the passive income from rents, as well as the appreciation on the property. And over that 7 year period, this will lead to a 2.25x equity multiple, meaning as an investor, you more than double your investment throughout the life of the hold. Now, as you can see here on the breakdown, the cash flow in year 1 is nothing crazy. And this is because after we acquire the property, we aren't immediately able to go in and renovate and increase rents. So that's where the stabilization period comes in. And as current leases expire, we're then able to go into each unit, renovate as needed, and then raise rents to market. So for this property, that process is expected to take about 12 to 18 months. And that's why you're seeing much higher returns in years 2 through 7. Another thing we look to do, as I mentioned before, is a cash out refinance. And we want to do this as soon as possible. But in this case, we're targeting a refinance in year 4 to provide investors capital back in the beginning of year 5. So as an investor, you get your initial investment back while still retaining your equity position, earning that passive income and capital growth, while lowering or eliminating your risk completely. And then finally, in year 7, we plan to execute the sale of the property. And for this opportunity, investors can expect just over $70,000 from the proceeds of the sale on a $100,000 investment. So overall, in this specific opportunity, a $100,000 investment will give you $55,000 in passive income over the life of the hold, as well as $70,000 from the sale, plus your initial investment back, leading to a total return of $225,000, more than doubling your initial investment, which is where that 2.25x equity multiple comes into play. This is what most of our opportunities look like and in regards to expected returns, but with slight differences when it comes to the business plan and the refinance period. And this is exactly what I meant when I said earlier that you want your money to be working harder than you are. Now, if this is something that you're interested in, and want to learn more about, schedule a call with Lucas, a one-on-one call with our team, and you can see if it's a good fit, and we'll also answer any questions you have. You can do that with the QR code on the screen on the left. And if it turns out to be a good fit, we'll get you signed up for our investor portal, and we'll get working on finding the right deal for you based on your investment goals, so you can start cash flowing from your multifamily investment and begin building that equity. Now, once you're invested, you'll start collecting the cash flow on a quarterly basis, building your wealth, and we'll keep presenting you with new opportunities along the way until you can reach those financial goals that we discussed on that first initial call. Lastly, before I hand it back off to Lucas, I do want to address one thing that's a top concern for new investors, and that's that they love this, they want to invest, but they may not have the money to do so. Typically, you're going to see investments go from 25 to 50 to $100,000 minimums. And the thing is, a lot of people don't think they have the money, but you just don't know that you probably do. And one of the most common ways people invest, other than in cash, is with old retirement accounts. So you can convert your old 401k or IRA into a self directed account where you have full control over your investment choices, including in real estate. And we've covered this before on how to do this and the benefits of doing so in a past webinar with an expert in self directed accounts, which you can also access with the QR code on the screen or on our website under the recorded webinars tab. So if is something that you're interested in, we can also discuss the potential option when you schedule a call with Lucas and I.
All right. Well, thank you everyone for joining our webinar today. Now, as we wrap up today's session, let's just take a moment to recap all the strategies we've covered for scaling your investment portfolio and growing your passive income. So to start, we explored how passive income, especially from real estate, can transform your financial future and provide you with that time freedom that we talked about. You learned why multifamily properties offer a robust and stable investment opportunity thanks to their scalability and consistent performance. We touched on our investment strategy through our syndication model, showing how it enables you to benefit from real estate investing without the hassle of property management. And Ryan even just outlined some clear steps to get started with syndications and even leverage your retirement funds to fuel that investment. Now, what it all really comes down to, simply put, is financial freedom and time freedom begins with taking decisive action. Now, you've gathered the knowledge and the tools to start making your money work harder for you. It's now not just about dreaming of a better future, it's about making that future a reality. We don't just want you to imagine a life where your investments are generating income while you focus on what truly matters to you. We want that to be a reality. So to help take the next step, for everyone who's attended and registered for this webinar, we will send you all an email with our Passive Investors Guide ebook for you to continue to learn on this subject, as well as a calendar link for you to schedule a call with us to learn more and see more about what we're worked on, and if this ultimately deciding if you want to invest in something like this. But please, everyone, we love to stay connected and support you on your investment journey. So you can email us directly at the emails below, as well as follow us on LinkedIn, on Facebook, and on Instagram to keep you up to date with our process. So again, guys, thank you so much for joining us today. We're excited to help you achieve your financial goals and create a future where your investments work as hard as you do.